Another concept that's important to go over when we're talking about investing is liquidity. So liquidity is the degree to which you can buy or sell an asset very quickly without impacting its price. Now, there's different types of liquidity. There's asset liquidity and market liquidity. Different markets have different liquidities. Example, if I look at the stock market, it's pretty liquid. I can sell something for a huge amount of money very quickly without impacting its price too much. If I look at the housing market, it's less liquid. So if I want to sell a house right now, I'm probably going to impact its price. Okay. Cryptocurrencies are a financial asset that's a bit less liquid, or a market that's a bit less liquid than other markets like stocks. So you have, the Forex market, the foreign exchange, which is extremely liquid. Then you have stock market, which is a little bit less liquid. Then you have the cryptocurrency market, which is way less liquid than the stock market. And then you have these other markets, right? Now, within each market, you have different assets, and different assets have different liquidities. And again, example, if you look at the stock market, if I look at a company like Facebook or Apple, they're very liquid. I can sell for millions of dollars right away and I won't impact the price. But there's some smaller companies that nobody knows about, that nobody trades, that if I want to sell for $50,000, well, guess what? The price is going to crash. That's the same thing with cryptos. If I want to sell $1 million worth of Bitcoin, I'm probably not going to impact its price by much. But I'll have to, not just send a market order, but compared to if I want to sell another coin that's unknown, I can break that coin, right? So you have to watch out within the each market, the different cryptos, for example, for us, or the different assets will have a variety of level of liquidity. And based on the size that you trade, it's something that you have to watch out for. Okay. So if I'm looking at something like Bitcoin, and again, when we're looking at liquidity, we're talking about how much people are on the order book. Is there a lot of buyers and a lot of sellers? Because if there's a lot of buyers and I want to sell for $50,000, well, the price is not really going to drop because there's so many of them. But if there isn't a lot of buyers and I sell for $50,000, the price is going to drop because there's not a lot of buyers. So I'm going to have to sell to people at lower and lower and lower prices. Now, there's a very high correlation, extremely high correlation between the liquidity and the volume. So something that has a lot of people on the order book is usually going to be something that trades a lot and generates a lot of volume. So we usually look at volume to predict the type of liquidity that something has. So if I go here and I'm looking at the volume for Bitcoin, and again, volume for 24 hours, we have here $4 billion. And if I go down the list, well, Ethereum has 1.5 billion worth of transactions that happened. Ripple, 260 million. So it drops. Let's take a look at, let's actually check by exchange. You know what? Let's go here and check for our Binance exchange. Let's check Binance. These are all the coins on Binance. And this is the volume that they traded in the last 24 hours. So I can see here that Bitcoin on Binance traded for 317 million. Ethereum traded for 100 million, almost 94 million. So let's check Ethereum out. We'll check the order book of Ethereum. Let's go on Binance. And then we'll compare it to a less liquid coin. I'll go on advanced. And let's check here our Ethereum. Okay, so I'll put here Ethereum. And I'll look at it based on the Bitcoin price. I'll quote it on Bitcoin. So if I want to get some Ethereum here, imagine I want to sell some Ethereum. Well, look at this. There's a lot of buyers here and a lot of sellers. And each one Ethereum is about $300. So, if I want to buy all of these, it'll be some money. Okay. Now, if I go back here, so again, if I want to buy, let's give an example. If I want to sell for $10,000, okay. Well, each Ethereum is $300. So if I want to sell for $10,000, I'll have to sell. We'll do $10,000 divided by bucks, I'll have to sell 33 Ethereums. If I sell 33 Ethereums, I'll have to sell, here I have like 2 Ethereums, 10 and 35. I'll sell down to this price. So I'll push the price from 40,448 to 40,415. Okay. So a difference of, and we can calculate the difference if I'm pushing the price down, right? Because if I sell 33 coins, I have to sell to this guy, this guy, this guy, this guy, this guy, and then when I reach this guy, I would have sold the 33 that I wanted to sell. So if I'm selling at 0.040447, which is the first price, and I end up pushing the price down to 0.0415, I would push it down by this much divided by the original price. How much was the original price? 447 times 100. I would have pushed it by 0.08%. My $10,000 would push this coin down by 0.08%, which is almost nothing, right? So this is a liquid coin. I can sell $10,000 without affecting it. And I could sell with way more without affecting it too much. Now, if I go down the list, right, and I see some less liquid coins, again, we're looking at the volume. Here it goes from 94 million, quickly drops to below 20 million, below 10 million, below 1 million, below a few $100,000 transaction per day. And look at this. If I go all the way down the list and I take something, let's say Ardor, that one traded for about $2,000 today. $2,000 on the Binance coin order book. And again, that's why the Binance order book is not something you want to use too often, because or even IEX, I don't even know what that one is. Let's check this one out. $1,500. That's how much this one traded at today. And again, when you're looking at all of the bottom ones, they're all based on the Binance order book, because not a lot of people use this order book. Most people are using Bitcoin and USD, and that's why you want to stay on it. The other order books are not liquid. There's not a lot of people on it. But if I check this one, RLC, on the Binance order book, RLC. Well, look at this. Already just by looking at the chart, I can see that when you have candles like this that are just aligned, that means there was only one transaction, right? At that price. There was no trading. So that's why you would see that there's all these lines, because it's a very illiquid coin. Now, if I look here, what is the price of one of these coins? They trade at 41 cents. So if I wanted to sell for $10,000 divided by 41 cents, I would have to sell 24,000 coins. So let's see, can I sell 24,000 coins? Oof. Let's try and just see the bids. I want to see the bids. Okay. So this here, if I want to see both buyers and sellers, here I just want to see the buyers. So I want to sell 24,000. I have to sell all of these guys, him, all of these guys. Damn, I don't even know if there's 24,000 here. What do we have? 2,000 plus 9, 11, 13, 14, 15, 16, 17, 18, 19, 20. Let's say we'll push the price all the way down to here. So if I want to sell for 10,000 bucks, I'm going to push the price from 0.378 to 0.26. That's a crazy movement, right? 0.0378, and I'll push it down to 0.2672. I'll push it by this much divided by the original price. The coin would drop by 29% if I wanted to sell $10,000 worth of this one. I would push it down and I would get a really bad price. So based on how much you're investing, right? Based on your size, don't invest in something that illiquid. You'll have an extremely hard time getting rid of it. It'll be almost impossible for you to sell it. And imagine trying to sell something like this when the market is actually dropping. Imagine the market is just dropping. There's no buyers. People are canceling their buy orders, and you want to sell this. You're going to have to sell it at such a bad price. So based on the size that you trade, make sure you're investing in things that are, liquid enough. So for us, we're always investing in things that are in the top 100 and then top few hundreds only when we know they're extremely good projects. Other than that, a lot of the things are in the top 100, meaning that we're going on Binance, on CoinMarketCap, and we want things who are big enough, who have big market capitalization. There are things that we get that are on, the top 200 and sometimes even a bit more, but these ones, it's because it's the early stages and we're very confident about them, but mostly it's things that are, on the top 100 list that is that are very robust projects and have a lot of volume and a lot of liquidity as well.